talking about tokenizing racehorses. Everyone is tokenizing everything. But if tokenization is not the goal, most of the institutions I talked to were still either highly skeptical or just outright hostile, right, against the crypto and digital asset industry.
If you don't believe, even if you're super skeptical on crypto broadly, at least look at the crypto space as a sand. It's only mid-July or so. We're at $400 million. It's been one of the fastest growing ETFs we've had to the moon, and we're going to $1 million per Bitcoin. First, we have to tokenize. There's no actual single stock that I can go point to that has Sean Lee's name on it.
That's right. Yeah.
And I don't think, one, people haven't had to know this. They just trusted that it worked.
Amy Oldenburg, head of digital assets at Morgan Stanley.
Welcome to Onchain Capital, your front row seat to the future of finance. From Web3 and AI innovation and digital asset policy to the power shift between East and West. Today, we are unpacking it all with Amy Oldenburg, head of digital asset strategy at Morgan Stanley. Amy, thank you so much for coming on the show.
Great to see you today. Thanks for inviting me to join you.
Amy, so you've had a long career focusing on the emerging market side of things at Morgan Stanley and through a lot of the work that you've done. Now, if you look at crypto adoption globally, it seems to be a pattern is emerging, right? You start to see a lot more asset being managed on the West, and then you actually see a lot of real usage like stablecoin, for example, being done in the emerging market where you're an absolute expert in. So do you think the two sides will converge at some point, or it's just that's naturally how things are going?
I definitely think we'll see the two sides converge. Maybe just to think about it from the last couple decades that I've spent in emerging markets, and I know you have background in the fintech space too, so you're very aware and much of the fintech development that's happened within many of these global markets. When they didn't have traditional infrastructure, telecom infrastructure, and also the penetration in traditional banking was low in many of these markets, the fintech space just continued to expand dramatically. So even like, it put digital assets aside, but even in the last 2 decades, we've seen a lot of the digital payment, mobile payment use cases grow and establish themselves out of emerging markets. And now more recently, if it's Europe, if it's US, the developed world, we're using tap to pay on our phones. We're sending money via fintechs, but we weren't the first to have it. There were definitely markets globally that were much more advanced for the need that they required, because the mobile infrastructure was the infrastructure, the priority infrastructure that they had to build on, and it was easier to build on. I think that's one of the challenges we see globally, is when you have that legacy infrastructure, sometimes it can be a bit of a burden and it's harder to make that transition over to the future. I think we'll probably see similar aspects within the digital world too. You know, sometimes I'll make the point of saying, if you don't believe, even if you're super skeptical on crypto broadly, at least look at the crypto space as a sandbox. There's understand the technology that works, understand the new models that are developing in that space, and learn something from it. Because some of the modernization, I mean, even if we think about the future of lending, I think there's a path ahead in lending that'll look very different than the very administrative burden that we suffer through in the lending space now in many of the developed markets. And we may see some of that technology emerge and be able to be used in a way that helps us in the future. Again, we're not there today, but I think it's something to keep in mind, not just write it off entirely, even if you don't believe in it.
So let's follow up on that, right? And if you think about the last few years, we've now seen a lot more projects, both in the developed markets as well as the developing markets, that are concentrating on tokenization. And I would argue even stablecoin as a product is really tokenization of money, right? It's digital money. So you start to see this word tokenization being thrown around quite a bit. But I've read a lot of previous interviews and articles that you have been mentioned in, and you've always have this thesis that tokenization is not the end game, right? Tokenization is the vehicle to get to some point. Maybe you can talk a little bit about that, because everyone seems to be talking about tokenizing this, tokenizing gold. I even had a guest on my podcast a few episodes ago talking about tokenizing racehorses. So everyone is tokenizing everything. But if tokenization is not the goal, then what is, from your perspective?
Yeah, I mean, I had a colleague of mine that said, so are you saying this is the securitization of everything? And I said, well, that's actually an interesting way to think about it. And maybe, again, to go back in history, so prior to being at Morgan Stanley for 25 years, in the early part of my career, I had spent some time during the first internet boom, the internet era, building websites for Fortune 500 companies. And if you think about that era of the late 90s, a client had to reach out to us and hire us to build a web presence for them. Now, the end game was not having the web presence. There was a very significant path beyond that, which was marketing, advertising, client engagement, payments,
Right.
shopping online. There were all of these aspects that came after. And even with we were just building websites for PCs, because at that time everyone just had a PC, no one had mobile. But if you think about what came after that, then we had years that we lived through where you would go to a website and they didn't have a mobile compatible web presence with their company, or maybe they only offered it on iPhone and they didn't have an Android version or vice versa, right? So there's an entire path and different periods and products that we had grown after we started establishing web presence. And that's a similar aspect of tokenization. First, we have to tokenize. That's kind of step one. We need to get into the digital
a
ecosystem.
wrapper. Yeah.
Exactly. But once we get into that digital ecosystem, really start exploring more the programmability, the interconnectivity, the velocity that can really, and maybe the efficiency that we can gain from some of those benefits of sitting entirely on the digital side of the fence. It's hard to really, and it's something that I feel strongly about even going into the end of 26 and into 27. I think we really need to start doing a better job of the vision of what's to come in the future. And I think I still don't hear enough people talking about the convergence of AI and digital assets. Because if you start thinking about even some of this agentic activity that we've seen over the last couple of months, if that evolves and if that modernizes, we've been talking a lot about just how quickly the technology is iterating. It's not the same as it was 20 years ago. 20 years ago, you have to wait 2 or 3 years for the next
cycle
to come out, the cycle to come out. I mean, cycles are feeling like they're 3 or 4 months long. So this is happening in a much faster pace than we used to experience 2 decades ago.
So it's really interesting. I mean, I have been fortunate to have gone through the last 20 years or so, the kind of the internet age, the cloud computing age, the open source age, and then obviously now going into blockchain and crypto. So if we look at those, I totally agree with you. The cycle seems to be so much shorter, because I mean, let's look at the institution, right? The institutional space. I remember 2-3 years ago, most of the institution I talked to were still either highly skeptical or just outright hostile, right, against the crypto and digital asset industry. And now that we have things that are being tokenized, especially a lot of digital financial products that's already digital in the first place, then it seems like there's a lot more pickup. I'm going to ask you a really personal thought, right? How much of that do you think is really the institution so-called seeing the light now? Or is it because of the current administration's overly friendly posture towards crypto and digital asset in general? Is it more to that side of it, or is it because this is now part of the evolution?
My personal view, I think this is more of an evolution of what's happening to many industries, which is traditional industries have to become technology companies.
Right.
And in the financial services space, doesn't matter what side of the business you're on, if you're on the investment banking, sales and trading side, or if you're on the asset management side, there was historically this hierarchy that existed for decades of front office and back office, right? You wanted to be the head trader, investment banker, how the trade settled, not your problem, right? And the same thing on the asset management side. I've been lucky to work in many different parts of the business, which has given me, now I'm grateful that I've had all those experiences because I understand the entire ecosystem from front to back. But I would regularly have, in my early days, my early career, where they would just bring a report, and I'm sure you have stories like this too. They would just bring you a report and say, there's a wrong number on here. Don't care what it is, don't care why it is, fix it. And so there was not a lot of understanding in terms of how the pipes and plumbing worked of the industry. It just had to work. And we were lucky. We've built a lot of systems in the back end. We went through the era of electronic trading, and that development was incredible in terms of the technology build out that we had to invest in. I mean, even with Morgan Stanley, who's number one in equity trading, I mean, the build, the proprietary build and the focus and the investment that's went into that has just been incredible. To this day, every time I talk to the various teams, it's just so impressive how deep they are in that knowledge base. But one of the things that we're starting to do now in this era of digital assets is we're having to unpack the entire pipes and plumbing of every single asset class to say, how does this work? And I'll give you just a funny story. I was on a call a number of months back because one of the areas of tokenization is treasuries. A lot of folks are talking about treasuries. Right. And there was multiple MDs on the call. And then the question came up, well, who holds the treasury? Isn't it at BNY? No, it's at DTCC. Wait, no, it's not at DTCC, it's at the Fed. Well, then what are we paying BNY for? And you get into this debate of like, do you know where the actual asset is?
Right.
And we talked about this at the Philly Fed conference last year too, just as it relates, there's a similar discussion around the wealth business. Are equities held in Sean Lee's name somewhere at Morgan Stanley or, at the DTCC. Well, it's held in street name, and then there's all this other ledgering that goes on in the background.
Right.
But I can't there's no actual single stock that I can go point to that has Sean Lee's name on it.
That's right. Yeah.
And I don't think, people haven't had to know this. They just trusted that it worked for the most part. But now these models are changing. And I think one of the things that's very interesting as we start to see modernization, if it's blockchain, if it's simply moving to 24/5 trading, which we're going to do in the US market later this year, you start seeing where the friction points are in that pipes and plumbing. And then all of a sudden, it may not be anything to do, again, with digital assets. It may be some operational system that the data runs through where it cannot either sustain the speed or cannot run real time 24/7. I mean, even there's batch processing that has been very standard way that we've done business for years. We have to change all of that. We are going to have to get to real time. I mean, even we think about data feeds, and I know you have experience with this too. It was always cheaper to go to 15-minute lag data feed on some of the platforms, especially or you had this debate. The traders needed real-time data, but some of the operations folks and others, they could take the 15-minute lag in the data feed because they didn't need that real-time data. But what happens when we go to real-time settlement? Now, all of a sudden, does everybody need real-time data? So you start, I think, just going back to the point of like, everything needs to be reassessed. And I think that's one of the challenges. Obviously, the political environment in the U.S. and the regulatory environment has like supercharged things.
Right.
But part of the challenge is also like it's almost like we're having, we're like doing a self-assessment of ourselves as an industry and relearning like what we are under the hood and how that's all put together.
It's quite amazing to hear the stories that you share, and first of all, it brings back a lot of old memories, and because I was the one with the screwdriver or at the terminal
Right.
building a lot of these, and I totally appreciate kind of the pictures that you're painting. And what it sounds to me is a lot of institutions like Morgan Stanley are not only looking at a new asset class, but really looking at brand new infrastructure that can modernize. The business is still the same, but you can now do it even more efficiently, more transparently, more compliant, and so on and so forth. And of course, the regulation and the policy side of things certainly help. So maybe we stay a little bit on the policy, right? Because we're now in July, and the big news the last few months, outside of the non-political side of things, is the Clarity Act. Right. And all eyes had been on the Clarity Act, and even my affiliation with the Crypto Council for Innovation. We've been deeply involved in working with our members to sort out where things needs to be and how do we push it through. But we're now in July, and we're looking at 2-3 weeks away with the August recess, right? So do you think there's still a chance that this happens? And more importantly, I'm not trying to ask you to kind of place a bet on one way or the other, but if it doesn't happen, the question is, if it doesn't happen, would the institution continue to charge the way as you have just mentioned, or would it slow things down?
I have said it in other panels. Especially where we are today, every day that goes by, the probability probably gets a little bit lower, and I think we're already pretty low. Maybe there's some magic shift that happens here, but we're really running, to your point, we're running out of days of the year, working days for this to get done. We definitely are still moving forward regardless. I think one of the things Clarity provides some different clarity on a number of points that would make it easier for some of the organizations to move forward. I think there's ways we can get that done in using other methods or other tools. I think, obviously the large, global banks like permanent solutions, not, temporary solutions. That it's not, I don't think it makes anyone feel good if there's a risk that a change in administration could significantly alter the path that you're building for, or impact it, especially with just the amount of investment that this takes and time and resources that are required to really build this modernization of infrastructure. Now, I don't think there's any argument on that. I think the other thing too is there's a couple aspects. Again, it kind of goes back to the complexity of what we're trying to do here. Much of this is still focused on the U.S. And I'll give you a story of when I was in Europe earlier this summer. I thought we were going to talk about European regulation. So I first told my team, okay, you need to do a deep dive. I want to really understand all the aspects about European regulation that I'm walking into, because I've been so in the weeds on the US side. I need to be brought up to speed. Land in Europe, do a number of meetings across the week that I was there, and almost every meeting I went into, the question was, tell me everything you know about US regulation.
Right.
And we almost didn't talk about European regulation at all.
Right.
Which was really interesting to me. And I think it just it underlines this anxiety globally that these different regions are having about trying to keep up with being innovative and both protecting their businesses and being thoughtful about how they roll out this innovation. And it's hard. I think even people that are really deep into the details on this, there's still questions. You had mentioned stablecoins. Okay, so we have Genius Act, Genius compliant stable, and everyone talks about cross-border as a great solution for stablecoins. Well, what happens when my Genius Act stablecoin goes into a jurisdiction
That's right.
that doesn't recognize Genius Act?
Right.
And what has to happen then? Are we doing a currency, like what looks like a currency transaction? Do we then have to convert into some other stable coin? What if they don't recognize stable coins and they're focused on CBDCs? And then what about, I think the other thing, and we were talking about this earlier, the global markets, right? So Genius Act is for the US.
Yeah.
What happens for all the global businesses that operate internationally? How do we operate, and what entities do touch our non-Genius Act compliant stable. How do we think about that from just a compliance and regulatory and control function? A lot of those questions still are not answered, and they're pretty complicated.
It's interesting. You shared your story with the European regulators. I recall meeting with a National Assembly member in South Korea, and I went in wanting to understand how they're developing and evolving the digital asset framework, digital asset user basic act. And then to your point, it was entirely about what the US is doing, what Genius Act is all about, how did they adopt, and so on and so forth. And I kept sitting there thinking, wow, this is it went from almost no US discussion because the previous administration was semi-hostile to the whole thing, and then now towards like over dominating the world's kind of topic. So it is interesting to see, and I think that goes back to my earlier question, which is all eyes are now on the Clarity Act, right? And they're trying to figure out, okay, if the Clarity Act does it this way, then I will have a certain way to figure out where things go. And if the Clarity Act doesn't happen, then what happened to them? So I think there's a lot of anxiety definitely to figure out both mutual recognition and also some sort of reciprocal type of policy framework to make it work. I mean, you guys launched a Bitcoin ETF, right? And I recall even the Bitcoin ETF had a lot of discussions in different jurisdictions, right? Some of them would allow for staking, some of them absolutely no, some of them are looking at all over the place. What got you guys onto that bandwagon? I mean, yes, everyone seems to be launching their own Bitcoin ETF. What made Morgan Stanley wanted to go down that path as well? And I understand Bitcoin is not the only major assets that you're doing as well.
I think it's one of the best places for an organization like ours to start because it requires us internally to really understand how to operate this business, what's required, the nuances of operating the business. It's also clear to me, at least at this point, and again, I have not always been the biggest proponent of ETFs, putting new technology. And again, I'm coming from the emerging market world. So no one in emerging markets would buy a Bitcoin ETF. Most of them don't even have a wealth, account. They're buying spot crypto because they don't have that formalized financial services infrastructure in their countries. So I'm coming from a different lens. But the thing that I've really come to realize is how easy it is to plug in that ETF to the existing ecosystem within the US. And especially for those that are not diehard digital natives or not philosophically driven, but just more have the view of, hey, I think, this could be something and I'd like some exposure in my overall portfolio. So I'd like to take some price exposure to this theme. And the ETF really offers you, or the ETF complex offers you a reasonably easy way to do that. I mean, that's why even within the transition that we've seen from mutual funds to ETFs, ETFs a pretty efficient vehicle for clients to get exposure to certain products. And so it was natural for us to explore that. We started with the most, I would say, the most OG, largest market cryptocurrency, Bitcoin. And it's been interesting to see. I think it's also like maybe tested a bit of a thesis that we had where Morgan Stanley coming in and really trying to understand this ecosystem. We launched April 9th of this year, and it's only mid-July or so. We're at $400 million. It's been one of the fastest growing ETFs we've had. And especially for the Bitcoin community, you could argue like this has been a terrible year for Bitcoin. Right? I mean, we've been going, we were down and then we kind of just keep going sideways. And then there's the quantum debate going on and a battle of where we're going from here and if we're ever going to get any sort of appreciation again. I mean, you really start sometimes in these Bitcoin cycles that we go through, it just feels like things get very negative. We're very bipolar in the Bitcoin world. We're either like to the moon and we're going to $1 million per Bitcoin, or it's like this is going to fall apart and it's just going nowhere. But even with that, the environment that we're living in, we raised $400 million in that ETF. And so did we need another Bitcoin ETF? I don't know. We had 45 or so in the market. We probably, you could argue maybe we didn't, but we also came out and we priced it at 14 basis points. And so that's also one thing I feel pretty strongly about. And I've lived through this. It was a very typical thing we lived through in the emerging markets world too. In early stages of market access for investors, you were able to charge more. because you might have been one of only a few that built out the operational ecosystem and support to be able to offer it to clients. The market matures and more people bring products to market. What should a single asset passive ETF cost? I don't think it should cost 150 basis.
Right.
So what is the right cost? And that's what we tried to get to. We tried to get to thinking about how it fits into the broader business and what we would charge for a passive single asset exposure. Because ultimately, and I've, even for the broader industry, let's bring more advanced products to the marketplace. This isn't, I mean, going back to your point on tokenization, having a Bitcoin ETF is not our end game. Early tool that makes it easy for investors to have some exposure and to understand what that ecosystem entails. The future should be way more advanced than a Bitcoin ETF. And that's where we should be able to attach, some higher margin.
Well, speaking of more advanced products, I read the other day that Morgan Stanley is planning to put tokenized securities on your own dark pools. That sounds to me a very advanced, forward-looking, way of actually interacting with one of the newest form of assets, which is basically putting securities on in a tokenized form. Is there anything you can talk about that? I know the product isn't launched yet,
Sure.
but I'd love to learn a little bit about what you're envisioning, how that's going to go, and what it would look like in day one.
Sure. We don't talk a lot about our institutional sales and trading business. It's like, I think
Right.
a lot of times retail captures more attention because just of the marketing efforts around that versus because the institutional business historically, it just wasn't, you had your institutional clients, you already had your relationships. So it wasn't really a function of, and also a lot of that business was built in an era where we didn't have social media. So we're still getting used to using social media in the world of investment banking and sales and trading. The one thing that I would just say kind of high level, which I think is the point to be made, is the way that our business is set up. We have clients that come to us and we are vehicle agnostic in terms of how they want to take that exposure. Our job is to offer them that exposure however they need it. So if they need it in long only asset, if they need that in some sort of derivative product, that's how we're thinking about it. And so the natural next step is if they need it in digital, or if they come to us in digital and they maybe need to convert that into traditional, we should be able to play across that whole spectrum of delivery. And that's what we do now. This is just an extension of what we've already done for many years. And, the one point that I would make is I think we'll continue to live in a hybrid world for a very long time. Maybe at some point in the future, we'll get to like fully digital, probably, a couple hours we could talk through. But, we're going to live in a world that exists with traditional and digital for quite a while, and we will need to be able to support that. And so that flow would go through our ATSs.
Amazing. Amy, thank you so much for your time today. I mean, we've covered quite a bit, right? And I enjoyed especially your point of view kind of coming from many years spent on the emerging market side of the business, and then now managing the entire digital asset strategy at one of the largest financial institutions in the world, Morgan Stanley. So really appreciate your insights around not only kind of your personal point of view and your personal experience, but more importantly, at large institutions and how you see products as part of the digital asset industry moving forward. So I am sure the audience will have a lot of insights gained from this, listening to this episode. Thank you again for coming. Really good to have you here.
Great. Thank you for having me. Great to see you again.
Bye-bye.
Sure. Bye. Thank you.